Hey traders, Todd Gordon here with tradinganalysis.com. This is for CNBC's Trading Nation. Traders, we're going to take a look at this amazing run in the stock market. Is it gone too far, too fast? Is this the beginnings of a bubble that is going to end very badly? Or are we on the cusp of a major generational bull market? Well, let's kind of set all the debate aside, thinking about what should be in the markets, and let's take a look at what actually is. So let's get into the charts, and I'll show you, give you some historical context, and maybe that'll help us figure out where to go. So here's a piece of analysis that I prepared for Fast Money yesterday. We were talking about this unbelievable tech run. So let's look at the XLK. This is the technology ETF to give us some historical context of just how far overcooked we might be in this tech rally. So I have three distinct periods here in the XLK. Number one is the current rally in technology. We are working on our 8th consecutive close on the weekly XLK chart. So where does that stack up in terms of historical runs? Well, if we go back to January 2012, you'll see we had 12 consecutive positive closes. 1, 2, 3, 4, 5, all the way up to a nice gap up to finish up that 12th consecutive week of gains in technology. So that was back in January 2012. Let's go even further back. 13 years prior, October 1999, we saw an 11-week consecutive gain in technology. So in context, our 8th week is not historically overdone yet. Conceivably, we could rally for another 3 to 4 straight weeks, and you can do a lot of damage on the upside in 3 to 4 weeks. Let's shift over to the S&P. And again, just recently on Fast Money, I was describing the Dow theory, and just to kind of give us context of how far this rally has gone and might go in the future. Well, there's three distinct trend phases, and if we apply it to the S&P 500 on the weekly to the 2009 credit crisis low, the first stage right here is labeled with letter Roman numeral I. That's accumulation. So that's insiders, that's early coming longs, those are value shoppers trying to scoop up the lows. So that's fine, that'll play out. We go into sideways consolidation here for a period of time. We then embark on the next trend phase, which is called widespread participation. So you get the breakout buyers, you get momentum players, then it starts to make mainstream news. We start to really rally up, and then euphoria really takes hold. We then go into another period of consolidation before the third and final trend phase, which is called distribution, takes hold. So now what's happening is this bull market is really starting to make headlines. Sentiment is extremely high. People are extremely bullish in here. And we're even seeing a price action that's starting to go a little parabolic. The reason it's called distribution is because the people who have been value shopping way back in 2009, the momentum buyers in 2013, they're going to begin piecing out of those longs as the late coming longs are piling in. So this final push does have room to go, but looking at the technicals, we've got a parallel channel that, depending on at what point we intersect, could be anywhere from 2,600 to 3,000. Plus, I've got a Fibonacci extension level from the credit crisis drop. That's at 2,682. So collectively, we're looking at a zone of resistance between 2,680 and even 3K, depending on our angle of approach to that uptrend channel. So there's room to go on the top side, but is this the birth of a new bull market? When you put in context in terms of historical tech runs, we've got another month or two. We might have, again, which is pretty impressive in terms of percent return, but another 400 points, 500 points the S&P over the next year or two, and then we're going to look for a significant reset to start the cycle over again. So in the near term, I'm bullish, but at some point, we're going to have to answer for this amazing run that we've had since 2009. For CNBC's Trading Nation, I'm Todd Gordon. Hope that longer term piece of analysis helps kind of give you context where we are. Be sure to follow us at Trading Nation on Twitter for updates on this trade as well as all the others. And speaking of Twitter, I did recently establish a short-term short in the S&P 500. I was willing to give 50% stop loss on the premium paid for our put spread. If you saw that video, I'm getting ready to back out of that position, so be sure to follow us at Trading Nation. I'll let you know when I hit the eject button on that trade. All right, guys, see you in the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.